Take a look at Amazon soaring after hours. The company just announcing a 20-for-1 stock split. It's a $3,000 stock, so clearly that could bring in a lot more buyers, especially retail buyers, and that's why you see the stock moving. Of course, there are caveats, right, Mike, that come with the stock split. It doesn't change anything fundamentally, but could attract a new buyer.
It doesn't change anything fundamentally. There is something. I mean, retail investors do flock to this kind of thing. They take it as some kind of an excuse, especially for options traders. There is a practical advantage to having a somewhat lower price share price because, you know, you do trade options in these lots of covering 100 shares. So it seems like it makes it cheaper and all the rest. Amazon's been a weak stock. I mean, that's the context here as well. It really has struggled for the last year and a half. Hasn't been able to get out of its own way since the early part of the pandemic. The company also authorizing a $10 billion share repurchase program that's new. It replaces one that was smaller, $5 billion in place.
That goes back to
2016. And the company only bought back $2 billion in stock under that authorization. So it's not been a major repurchaser of its own stock. And keep in mind, even at $10 billion, it's a very small percentage of the market cap, which right now is $1.4 trillion. So, look, Tesla stock split, it fed the crowd, it fed the public, this kind of cosmetic change that they wanted. Apple did the stock split not that long ago. And there's another side story, which I don't really think anybody should care if it's the case, but maybe it places it in the price zone to get into the Dow Jones Industrial Average. Obviously, the Dow is somewhat under exposed to the very largest FANG-type companies. Obviously, Amazon with a massive economic footprint. There's no real magic in terms of performance of your stock if you go in the Dow. I mean, Salesforce can tell you that, right? That didn't necessarily
kind of a badge of honor.
It used to be. It probably still is. And, you know, Amazon, I would have to say, too, you know, clearly it's not one of these founder-controlled companies the way, you know, a Facebook is or Alphabet. So it at least has that clearance to potentially get in there. So, you know, it's an interesting knee-jerk reaction in a stock which remains, you know, before this little pop down 26% from the top.
And underperforming some of the other big cap tech, certainly
Absolutely.
Apple.